Joining me now is Caitlin Long, founder and CEO of Custodia Bank. Caitlin, welcome.
Thanks. Good to be back, Kelly.
Are you as bullish as Balaji Srinivasan, who thinks hyperinflation takes Bitcoin's price to $1 million in 90 days' time?
Well, I wouldn't make a price prediction like that, but it is clear that a lot more folks are waking up to the instability of the traditional financial system and being orange-pilled, so to speak, looking at Bitcoin for the first time.
So why do you think it's taken this recent leg higher? What do you think is driving that?
Well, it's a couple of things. There are some technicals where stablecoins have lost their banking access due to Operation Choke Point 2.0, the failure of a couple of banks and the debanking that is taking place among bank regulators coming out of Washington, D.C., pressuring banks not to bank this industry. And as a result, the selling of stablecoins going back to Bitcoin as the core asset in this industry has created some buying pressure. But then also it is an insurance policy. It is a scarce asset, just like other types of scarce assets that are insurance policies against financial system instability. And boy, I sure am seeing it in my traditional finance connections on social media. They have spiked. There are a lot of people sensing that there's a paradigm shift in the traditional financial system now.
Well, a lot of people nervous about their careers, probably. I mean, it's very tough to watch this play out, knowing that perhaps the Fed could do something to try to support it and avoid it, and whether they choose to do so or not, we'll see. I think it'd be interesting just kind of back up for a second and talk about stablecoins, some of the parts of this ecosystem that you mentioned. It's not necessarily Teflon. I mean, when we saw going back 2 Sundays to the SVB collapse, we started to see USD coin break the buck as well. I forget if it got as low as, what was it, 93, something in that range. Are we so sure that it won't be tested again as this turmoil plays out?
We're not, and it's because stablecoins ultimately do rely on connectivity to the U.S. dollar banking system, and if they're being shoved out by bank regulators, then definitely there are questions about that. It's interesting that Tether, which says they've stayed offshore and only gets their U.S. dollar banking from offshore entities, so they say, Tether has massively taken market share among the stable coins because those that were trying to become regulated and get inside the regulatory perimeter in the U.S., including my own company, Custodia Bank, we've all been shoved to the side. And what that's doing is pushing more of this activity into the proverbial shadows.
Right. So even looking at Signature, whose collapse seems to have quite a bit to do with its crypto exposure, what does that tell you as someone trying to lead a banking effort in crypto?
Well, there is a clamoring for safe banks. In fact, there's a very interesting article in Harvard Business Review that came out on Friday talking about the need for safe banks, that there are a lot of businesses whose payroll exceeds $250,000 every week or every month. And forcing businesses to put their payroll at risk to a sudden bank run just doesn't make sense. And they're not clamoring for a full guarantee of deposits in the banking system. What they're clamoring for is exactly what Custodia Bank proposed and the Fed rejected weeks before the bank run started, which is a non-lending bank that just sits 100% in cash for these critical payments and deposits that are really volatile and can move around. It's the only thing that makes sense. Instead of forcing businesses to put their payroll payments at risk to a bank run, which is literally what everyone is doing if they hold more than $250,000 in a bank account right now.